Hello, everyone. My name is Stephen Fox. Welcome to my show. We had quite a wild week, a very turbulent week. So, I'm going to tell you what I'm investing in right now, and then I'm going to explain the happenings, which I foretold in my previous video, that inflation is of less importance, that it's how hot the economy is. Right now, I'm investing in oil, secondarily in gold, and I'm still in my AI stocks, my artificial intelligence stocks. Now, I think the artificial intelligence stocks are consolidating right now. I think we won't start to get a trend on those until we start getting big positive earnings from the big technology companies or artificially intelligent related stocks. So the thing is right now is oil, I think. There's so much turbulence in the world that on Thursday, the stock market took a big dump. Technology took a big dump. In my mind, the stock market is the NASDAQ and technology stocks because that's what I do. So it took a big dump, and it was on geopolitical concerns that Israel had attacked Iran, and we were now waiting for Iran to retaliate. You know, you get these big red flags thrown up all the time. What if this happens? What if that happens? I can't keep up with it. There's always bad things that can happen in the world. The best way I deal with it is to have a 4% trailing stop loss. Saved me, and it certainly saved me on Thursday. On Thursday, there was the geopolitical risk, and that was mainly Israel and Iran and things heating up there. But in the background, there's also Ukraine and Russia. There's also the Houthis shooting at passing ships as they go into the Red Sea. So you have all these things that are going to make the price of oil higher. And as the war heats up, as we expect this summer, oil could easily go to $120. Some say it could go as high as $150. Oil is unpredictable in my mind, and I generally just follow a trend. And right now, I'm in a triple leverage oil fund, and it has the 10 largest oil companies. It puts 10% in each of the 10 largest oil companies. So it tends to be a good read on where oil is going. And I've made good money on that so far. It made up for some of the losses I had on Thursday. I think I lost about 40,000 on Thursday because artificial intelligence took a big dump. But then on Friday, I recouped 12,000 of that through my oil and gold fund. The gold fund I'm doing is NUGT. It's the Gold Miners Fund. You want to think of NUGT, NUGT. That's the way I remember the symbol. It's a nugget of gold. Commodities are increasing in price, which includes oil, of course, and the metals are coming up in price. But it was surprising that the jobs numbers, which were supposed to be a disaster for the stock market, turned out to be a boon to the stock market, and prices shot up again, and I made up for some of the losses on my artificial intelligence stocks that way too. So I'm sticking with my artificial intelligence stocks. I'm doing gardening with my artificial intelligence stocks. I'm getting rid of the ones that aren't so great, and I'm decreasing some of my standing in some of them. But I'm sticking with it. I think it's a long-term trend, and I'm a long-term trader, and I follow these things. And I'm going to keep trading artificial intelligence stocks, NRGU. And I expect it to keep going up because oil has just started to go into the 90s. I expect it to at least hit 100 with the heating up of the war in Russia and Ukraine. But I think its topping out price is somewhere between 120 and 150. But this is something that I'm looking at daily, and I will get out of it if the trend discontinues. Again, I've already made enough money on it that if I get a drop, I won't lose any money. My gains are locked in on NRGU, because I have a trailing stop loss of 4%, which saves me all the time, and I expect it to keep saving me. And looking at the chart, you can see that's gone up from about $470 to $713. And there's more where that came from for sure, I think, given the world situation and the geopolitical considerations. I think this is an easy ride up. Its relative strength is 87, which would suggest it's overbought, but I don't think it matters what the relative strength is. I think what matters is the price of oil, which I'm watching closely. And with gold, I think the geopolitical considerations enter in. When the world gets this unstable, people want something solid and something that does well with inflation. And I think that we're stuck with 3% inflation for a while. It's just going down so slowly that it's going to stick around 3%. And as I forecast in my previous video, I said what would be more important is how well the economy is doing. And the numbers that came out on Friday just confirmed that the economy is booming relatively compared to everywhere else in the world. And so that's overcoming the inflation. But I think we're going to have a hard slog here getting inflation down further, simply because it's competing with a booming economy and really with a wartime economy in many ways. So I think I'm going to do well with my gold miners fund, NUGT, my little nugget. Gold, I've watched it for decades, okay? I'm old, okay? I've watched it for decades, and about every decade or so, it has a run, okay? Otherwise, it tends to go up, pretty calmly, and not really something that I'm very interested in. And I think people are going to want the security of gold, especially in inflationary times, which I think we're guaranteed to keep at around 3% for a long time. They're never cutting rates, and not anytime soon anyway. And if they do cut rates drastically, that'll be the worst news you've heard, because it'll mean the economy's faltering and falling apart. But as we look at the chart on my nugget, you can see that it's gone up nicely in the last month, and mainly the last 2 days. And that's what I look for when I'm investing. I want to see something just really taking off. And Thursday it took off, and then on Friday it continued to do the same. I think gold is going to continue to run up. I think we may be at this once in a decade run on gold. Let us see. If not, again, I have my 4% trailing stop loss, which will save me again, and I will probably make money besides. So last week, there was this expectation that Friday would produce a hot jobs number, and that would make the market fall apart. Well, first, we're going to look at what did happen on Friday, and then we're going to look at why didn't it work out the way people thought? Why didn't the market totally fall apart when the jobs numbers exceeded all expectations? So geopolitical considerations and uneasiness led to the drop on Thursday, but it was thought on Friday a hot jobs number would make it go down further. And just the opposite happened. We got very hot jobs numbers. 303,000 jobs were added when 200,000 were expected. And the unemployment rate dropped to 3.8%. So there's much more jobs. But I think the critical thing was that the wages did not grow any more than what was expected. And wage growth has been coming down, and that's releasing inflation fears somewhat. Although you would think these gas prices would be worrying people too. We will see on the CPI that's going to be released on April 10th, on Wednesday, April 10th. That will give us an idea of how bad inflation is. but that's not expected to be that much worse. It's going to be in the 3% range. Again, the headline number will probably be up a little, but it's thought that the core inflation will actually be down a little. So it balances out, and we're just kind of stuck in the 3-something inflation range. And I think we're going to stay stuck there. So for right now, I'm sticking with my artificial intelligence stocks, which I believe are consolidating, but I'm investing heavily in leverage oil and gold bullish funds, which I think will do well. Thank you.